Good morning and welcome back. Mike Eppel, he's back. Happy Friday.
Hey, same to you. Thank you. How are you?
Thank you. I'm good. All right. It's like we play this game that is not fun at all. It's how high will it go? And we're talking about gas prices.
Yep, going to see another record this weekend, Melanie, unfortunately.
Oh, good.
Yeah. It was funny. I heard this morning, fill up today because tomorrow it's going to be more expensive. It's already expensive.
I know. It's true.
Like really, when we're at $2.12 a liter and going up to almost $2.16 per liter tomorrow, we're at levels we've never seen before, and it just it's a situation where a couple of cents here and there almost doesn't make that much more of a difference. It used to, but when it costs $100 on a fill up easily for most vehicles now, and I don't know where the necessary break point is. Do we start to see fewer cars on the road? Not yet.
Not
if you
sure.
look at some of the traffic statistics. Or do people just say, okay, I'm spending money here to drive. I'm not spending so much money over here on other things. And we're actually starting to hear a little bit of that from the retail sector, where people are starting to shift their spending trends. Unfortunately, we talk about the price for oil, but it's the wholesale price for gasoline, which is also traded, the refined price. And I want to hammer this point home. Watch that for the retail price, because that's really what the market is based on. And it's at a record this morning, $4.28 per gallon. The U.S., they've got a price at a $5 per gallon for the first time ever on average. So it's here, it's there, it's everywhere.
There it is. Okay, a lot of data that you're going to be sifting through this morning, both here in Canada and the U.S.
Job report coming from Stats Canada at 8:30 Eastern this morning, and it's actually expected to be fairly steady for the first time in months. The labor market had just seen this massive resurgence, right? Jobs created month to month. May, probably 10,000 jobs, 5.2%, still pretty low, actually quite low. It's the U.S. number that's really going to be the market mover, and everybody's talking about it because inflation in the United States is at north of 8%. For months now. It's going to continue to climb. We haven't reached peak inflation. We'd like it to start to turn, because then the markets might settle down. Yesterday, we saw the Dow Jones drop 600 points plus because central banks are raising interest rates. Bond yields are going up. The market is kind of tipping over the other direction, and that inflation data out of the United States, gas is not getting any cheaper. It's continuing to climb, so that's why they're saying we haven't reached peak inflation quite yet. Okay,
are we going to see much larger rate hikes from the Bank of Canada?
Yep.
Just like that, yep.
Bottom line, yes. And it was interesting what Governor Tiff Macklem had to say yesterday in the Financial System Review, that they're open to raising rates more aggressively if needed to, again, combat inflation, to, again, adjust consumer spending trends. Maybe 75 basis points will be the next increase next month. We've had a quarter, 250s, and now a 75. Long-term mortgage rates have gone up 3% here in the past few months. When people start to renew their mortgages, they're going to be in for some sticker shock. And that's actually something that Tiff Macklem, the Bank of Canada governor, said. The big risk is high household debt and real estate prices. So they're raising interest rates, and they're probably going to cause problems on the back end of this with those two issues as the biggest risk to the economy. So it's a talk about a balancing act. I don't know how they're going to get through this.
All right, so show me the money, Mike. At least the big banks are starting to dole out some dough.
Yeah, good time to be in the banking industry. It typically is. They're paying a lot more, actually, for base salaries and high-tech talent. All of the banks have been raising base wages over the course of the summer, mid-year increases because of inflation. And again, the tight labor market, Melanie, we've seen, banks are high-tech companies. Let's face it. They have a lot of computer systems going to keep everything working, and they got to pay up to get the war for talent, so to speak. So, the banks, we talk about their massive profits. That is actually going back to some extent into the payrolls.
Oh, boy. All right, Mike, have yourself a lovely weekend. You got a lot to do today. We'll see you again Monday.